Hello, investors and traders, and welcome to the Midweek Report. I'm AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As you can see here, we have this big green candle on the chart that is also a bullish engulfing candle. But look down below. Very interestingly enough, we have a lower volume day, and we have the oscillators still hinging lower with the CCI down there as I magnify that almost at a sell signal. I think that actually could happen tomorrow. We'll see what happens with the unemployment numbers and some of the other economic data that will be released tomorrow at 8:30. But remember, bullish engulfing candles are right 80% of the time. And usually the times when they fail, which is 20% of the time, it's usually at a top. In fact, if you go back here, hard to see, but right there is a bullish engulfing candle. Let me magnify that for you right there. That was a green body candle that engulfed the previous red body right there. And that's an example of the times that bullish engulfing candles do fail. Now, I'm not going to say it will. However, the oscillators down below combined with that drop in volume tells me that there's more sell signals than buy signals. Now, keep an eye on these forecasts back here, because you'll notice that back here in August, I had a two-part forecast where I had the upside target followed by the downside target, and it took a while for that to hit. Same thing, I think what we're going to see is a repeat of this whole pattern. So here's a two-part forecast. Took a while from that day. Here's a two-part forecast. I think it's going to take a while before this happens, but I do believe that downside target will hit. In the meantime, we had a webinar with our option traders on Monday to go over all of our positions. And while most of the folks that follow me on YouTube are not members of StickyTrades, it's important for you to understand that over 90% of our positions that we're currently holding are still positive delta or bullish positions. We will absolutely be moving into negative delta or more bearish positions once these moving averages and short-term trend lines start to break. I always focus on the monthly charts right across the board because, again, look at that monthly chart. Wide divergence from the moving average. You have 6 months in a row without any kind of a pullback or a correction. And you can go back years and not find that many green candles in a row without some sort of a pullback, especially in October. Now, we just passed the halfway mark here in October and coming up on the presidential elections. So there's still a lot of what we call black swans that are flying around. We don't know what the October surprise is going to be. You can check my ZeroHedge article from last Monday to see what I'm talking about with regard to the October surprise. But I'm still keeping the downside target because when you look at the monthly chart and then you look at the downside target, there's my downside target. You see that right there? So it's not a far stretch to think that we can get 1 or 2 red candles here to hit those targets. So in the meantime, we are option swing traders. If you're interested in learning how we are making money in the markets using conservative option spreads, you could come on over to StickyTrades and sign up for a free 15-day membership. It is absolutely free. You could ask anyone who's tried this out. There is no sales pressure whatsoever. I'm all about building the relationship, not about trying so hard to get the sale. I'd rather build the relationship with all of you, and then we can come together on these webinars and feel more like a family than anything else. And I mean that wholeheartedly. All right, so downside target on DIA still in place, as I mentioned. Let me get that data box up there. That's 411.32. Now let's look at IWM. Very interestingly enough, here we have, again, a long stretch of green on the daily charts. We have 6 green days in a row. Look back at the past. Here was 5 back here. Can we find any more than 5 or 6? It's hard to find. Look, 2, 3 back here. Here's one. We have 5 back here. We're currently working 6. And look at the hinge on the CCI and look at the hinge on the stochastics. So I'm still keeping that downside target on IWM at 212.78. I know I'm taking a little time here looking at the monthly charts, but you have what could be a double top or an M top formation right here. And M tops are as reliable, or as significant, I should say, as what we see in head and shoulders tops. So an M top is where you have the, more or less the top of the M is the resistance area. And if it breaks out below the equivalent of the neckline on the M, then what you would expect in a measured move to establishing targets is you take the distance from the neck to the top of the formation and you attach that to the breakout point. So if this is in fact a M top, like I think it is, then we could see over the next couple of years significantly lower prices in IWM. So keep an eye on that. Now, you could also look at this, and some of the bulls might say, well, isn't this a rising wedge or ascending triangle formation? Yeah, you could say that. However, it needs to be a breakout over that major top on very high volume. Right, so here's an example of that. You had more or less a resistance area. Notice the volume increase right here as it broke out over the resistance. And then also notice the distance it traveled, which was the width of the channel. See, when you're measuring channels or patterns such as this, you take the width of the height of that pattern and you attach it to the breakout point. I just think there's way too much going on for us to keep going like this. With earnings per share as are dropping. You look at what's happening in Europe, it's the same thing. We got stocks that are moving to record highs in the earnings per share right across the board are dropping. So there's divergences even on the fundamental side. So again, downside target on IWM still in place right down there at 212.78. Looking at the Qs, which I find extremely interesting, while the Dow and IWM were more positive, right before the close, we were down on the day for the Qs, and it looks as though we've got a full-fledged pivot point here after a bearish engulfing candle. Look down below, you've got a hair away from crossing on the stochastic with a sell signal, an official sell signal on the CCI, which of course is my favorite oscillator of all time, and therefore the downside target on the Qs is 464.86. Again, taking a look at the monthly chart, you can see here we've got a wide divergence from the moving average, drop in volume, a consistent drop, I might add, and a negative divergence down here on the CCI. You got higher price highs with lower highs on the CCI. When was the last time we saw that? Negative divergence right here, right before the big sell-off that we saw in 2021. And so you got to be on guard. Anyone who's long in their positions right now, it's just a good idea to put protective stops, maybe use options to possibly collar your position. If you want to learn more about that, come over to Sticky Trades. We have Sticky Trades University that'll teach you a little bit about options and how you could trade them and even protect your account if you're a long-term buy-hold investor. All right, so downside target on QQQ still in place right down there at 464.86. Taking a look at SPY. Then I'm going to talk about Bitcoin because it's important that you look at what's going on there, because there's a handful of Bitcoin related stocks that you could be taking advantage of with the price swings, and we're doing tremendously well, especially with Coinbase, ticker symbol COIN. Get to that in a moment, so stay tuned. All right, here we have a bearish engulfing candle yesterday, oscillators right here, sell signal, close to a sell signal on the stochastic, and so downside target still in place for SPY at 555.58. Now looking at the VIX, interestingly enough, remember I talked about that moving average being a support level. We might see a little bit more of a drop in the VIX because that's a bearish engulfing, and we got the oscillators down here still going down. But that moving average will most likely act as a support level. And remember, if the VIX starts climbing, and I still have my upside target on that up there at 2668, if the VIX starts climbing, that's inversely related to the S&P. So if the VIX goes up, S&P drops, and all the reasons why you should add more protection or be very cautious in this market. Now, remember what I talked about? Bitcoin, here we go. I put this one out yesterday with a new downside target on Bitcoin of 63,140. All of these diagonal lines back here our past targets. And you can see that when I put those targets out, there is no price action in line with that diagonal line, if that makes sense for you. I'm projecting out at what that target is going to be. And right now we're still tracking 100% target hit rate. How long will that go on at 100%? I don't know. But once I miss, it's no longer 100%. It'll still be in the high 90s. But take advantage of this while the Bitcoin market is trading so technically. So we have resistance up here just under 70,000 on Bitcoin. And if you want to follow along with what I'm doing with regard to the forecast, you just follow me over on X, and you could type in AJ BTC forecast here. See this, I have this already highlighted and hyperlinked there. So if you go and click on that, you'll see all of my forecasts for Bitcoin right here lined up in chronological order. And you can see that the upside target here was hit at 64,700. Then I went back down. That one hit. And so now I'm going back down again for a new target of 63,140. Like I said, we're trading the Bitcoin related stocks. Okay, so if you're an option trader, there are huge opportunities in the market to be able to trade Bitcoin related instruments. And if you don't have a whole lot of money in your account, you don't have to worry about that either. You could paper trade for a little while and follow along with us until you learn it well enough. One of our members, we'll call him G-Man, paper traded for 2 years before he actually put money down in the market until he understood the concepts. And he's one of our most successful, if not most successful trader that we have as part of our membership. And you could mingle with folks like G-Man and Tim and Bob and George and some of the other ones. And then you could ask questions with me as you hop on these live webinars and learn how to trade during an open market. Or if you can't make it during an open market, you listen to the recordings. It's really that simple. So tonight from 6 to 7, we have the rapid fire stock analysis session. Last week, I analyzed 74 stocks. Now, the reason I had so many is because we had the hurricane hitting and I recorded the session. We took ticker symbols from the audience and I recorded a 1-hour session and went over 74 stocks. And we have over a third of those targets have already hit in 5 trading days. That's amazing, the results that we're getting because the charts are that good. So when you look at my free YouTube channel here, you're only getting the major market ETF forecast. You plug in to the rapid fire session and you're getting hundreds of stock forecasts over the course of the month. And with an 82% hit rate, you can see all the opportunities that could pop up in such a webinar like what we do on Wednesdays. So that is it for the midweek report. I'll talk to you on Friday when we end the week with the weekly market report. And you stay tuned and we'll talk to you later. Bye-bye.